Unrivaled investors. Regular viewers know that my goal with this channel is to help educate investors out there, create these educational investment videos, taking my view about an individual company. And usually what I'm calling out towards the end of the video is Unrivaled Investing, which is my membership where I'm sharing investment ideas, talk about what I'm buying and selling. And it's a community, where I'm interacting with fellow members of the Unrivaled Nation. I also offer a function where for folks that say, hey, I'm interested in this company, I'm researching it, but I'd really like it for you to take a dive. I'd really like for you to make a video on it so that way I could see your thoughts and how you'd sort of peel this apart. And so I also offer this video production. This video is one of those custom video requests, and there are links below, if you're interested in getting it yourself, for me to make a custom video. So this is an example of an investment case study for a company that was requested. So this is someone saying, hey, I want to learn more about this because, hey, I might see something interesting about it. What's your take? Because I don't want to lose money, or is this a great investment opportunity? What does your professional analysis say? So that's my goal with this video, to talk about a company that was requested. And full disclosure, this is not financial advice. So it's very common for investors to see presentations, and I haven't even mentioned the company yet. It's very common to see investor presentations where you're saying, oh my goodness, look at this revenue growth. I mean, any company that says over 2 years you grew from under $1 million in revenue to $16 million in revenue, that would strike you as just exceptional, saying 276% growth, talking about positive EBITDA. Okay, so if you're positive EBITDA and you have rapid growth and you're 64 million run rate, okay, this is interesting. That would get a lot of people's attention, that growth rate. But the problem is with growth rates, it's very easy to manipulate it. And so you're going to want to dive deeper. Now, a lot of folks will go, oh, okay, but aren't they tapping some huge addressable market? And so, people talk about the gaming industry, a huge addressable market. And, oh, if you just win a small percentage of this market, look how much growth you could have over time. And so these are the common arguments you hear. But then let's actually check the reality. So today, the company that was requested is ESE Entertainment. So this is, someone, paying me to say, hey, Daniel, make this custom video. Help me understand, is this company worth diving into? Should I, maybe they're an investor. I don't know their story. Maybe they're an investor in the company and they're trying to figure out if it's worthwhile to keep holding. So I'm going to share my personal thoughts as we go through this. So this is ESE Entertainment, ENTEF. Is how it trades on the over-the-counter exchange, OTC. However, it also trades as ESE on the venture exchange in Canada. You're looking at a teeny tiny company, folks. You're looking at 25-30 million US dollar company. So, you want to check yourself before you wreck yourself here. I mean, you're looking at the penny stocks. This is, you might be looking at a dumpster diving type of thing here. So you want to understand what you're looking at, and you want to make sure you're not falling for something that could be highly problematic. So whenever you're looking, and keep in mind, I'm not pooping on small companies. That's not it, actually. One of my top positions is a company that's under $100 million. But that's because, I like management. I've actually talked to the CEO in that case. And, they generate free cash flow, and they've grown. And the CEO owns a large stake in the company. And he's a proven track record of growing without diluting shareholders. And so it really comes down to certain basic things. So I'm not saying, hey, just because you're small, you're trash. What I'm saying is, hey, if you're small, and I know this is the trap for a lot of, small investors, is to see the promise of hyper growth with something, but you may be missing part of a bigger picture. And so you want to understand what's going on, and you need to check yourself to make sure, hey, can you trust management? And B, does this seem like a legit company? So let's dive into understanding these aspects. So first, this is sort of the current management that you see based on their website for ESE Entertainment. So there's Conrad, who's the founder and CEO of ESE Entertainment. Well, what's he do? How has he proven himself? Well, he talks about outside. This is from their website. Outside of the esports industry, which is what ESE is targeting, he's also the founder of a global real estate holdings and private equity firm. So at this point, I'm saying, on a scale of 1 to 10, do you get any points for me saying, hey, I'm excited about your ownership and that I have confidence that, you're the guy? It's like 10 is max confidence, 1 is minimum confidence or no confidence. I'm at a 1 with that, because I have no idea what global real estate holdings, like if you were so successful with real estate and private holdings, why, or private equity, what are you doing with this? I just don't know. Like maybe it worked out really well. Maybe he's making a large investment in this company. So, okay, so I'll want to understand that in greater detail, but this isn't the background that gets me super excited. I mean, what gets me excited when I'm looking at management is seeing something where it's like, hey, this guy was a founder, and the Conrad's a founder of this company, but he also found this other company that he sold to Microsoft previously. And like, oh yeah, and he sold for $1 billion after he raised, $10 million. So it was a tremendous success. And so like, I want proven entrepreneurs, guys that have done this before, not sort of very nebulous background. So like, you want to nail this stuff down especially if you're looking at a tiny company. So next up, Eric is the COO, holds a computer programming. Once again, I'm not really seeing something here that makes me think high degree of confidence. So now we're looking at the CFO, and she, I believe, was recently brought on board, and she came from Great Canadian Gaming Corporation, which was acquired for $3 billion. It's a little nebulous what she did previously, like previously led senior roles. So not saying that she was previously the CFO, or not saying that she was the controller, but may have worked with the CFO, may have worked with the controller, in this business that was acquired, but now she's the CFO here. So I'd argue so far, looking at management, she's probably the only person I've looked at where I'm saying, okay, this person has some background that makes sense to me. Or I could say, hey, I could maybe get behind, but she's only recently come on board, I believe, as CFO. Okay, so what does this company even do? So we did a quick management check. I got to say, I'm not excited. I'm, at this point, it's really a show me story. Like, hey, you better have an amazing story at this point with amazing financials to really get me convinced. So what do they do? So they talk about being a global entertainment and technology company focused on gaming and esports. Check it. Can I be real a second? For just a millisecond, let my garden tell the people how I feel a second. If you tell me you're a global entertainment company and you're a $25, $30 million company, like, check yourself, man. Like, what are you talking about? And then they continue saying, they're talking about considering selective acquisitions that align with its objective of becoming a dominant global player in esports technology and infrastructure. Okay. The company's revenue streams include media rights, sponsorships, and advertising, events, and merchandise, and competition earnings. I'm looking at this thing and I'm thinking there's so many different pieces of revenue here. It's really unclear what your value proposition you're trying to do. You got media rights, sponsorships, advertising, events, and merchandise, competition earnings. None of this really speaks out to me. Like, what I want to find with a great company is like, hey, this is our value proposition. This is the core product that we're offering. Maybe it's just one revenue stream, but this revenue stream is going to grow organically like crazy. And we're not going to make any acquisitions because we know this core product is exceptional. And this is just going to grow like crazy. And we are going to self-finance our growth. And that's a beautiful story. Maybe it's some software product. Maybe it's a pharmaceutical product where it's like, hey, this is this brand and we're going to raise prices and we're going to sell more each year. I look at this and I'm thinking, I don't understand what's appealing here, especially for a small company. It means you're not really focused, or maybe you're throwing a lot of mud on the wall. Then they talk about, in addition to these 4 original sources of revenue, through the company's acquisition of WPG, Digital Motorsports, Frenzy, and Game Addict, the company has expanded into the following business lines. So as if this wasn't enough already, they now talk about fan engagement, telecom infrastructure, and advanced simulation racing infrastructure, technology, and support. I look at this and I'm saying, this company is trying to figure itself out, but it's not there yet. So this is getting really too hard for me unless they have beautiful financials. So let's look at their financials. And so once again, they break it out into a couple of different segments. You see, once again, the latest financials haven't even been updated recently. It's end July 31st. So why haven't they updated from more recently, financials? So then I see these 4 different segments: digital media and entertainment. That grew really well from 500,000 to 7.2 million. Their call center business declined by half, though. Not really sure what the story is there. Their telecom business is up significantly, and they bought a company for advanced simulation racing. So then you try to understand, well, okay, how much of this is organic growth? What's really going on here? And then management says, oh yeah, the reason why it grew is because we acquired these two businesses. So once again, I really have no perspective here that gives me confidence that this business is going to keep growing on an organic basis, because that's what you want to see. You want to say, hey, this business is able to self-finance. You do not need to issue new stock. You do not need to go buy new companies. This is an exceptional company that offers, that's the question you're asking. Is this an exceptional company? And at this point, are they offering an exceptional product? I'm not seeing anything that really strikes me as really interesting. Now, what are these different products? From my understanding, is sort of looking at it, is what you're talking about is, one is like a game studio offering. So that way, like an esports offering, like if you have a esports team, you can have it at their studio. So it's sort of like a production studio. And then a very different business, which is tied to helping game developers acquire customers. So a game developer will say, hey, here's a $5 million marketing budget. Can you go acquire a bunch of players for us? And so that's very different businesses that they're acquiring, but okay. And so I look at this and I'm saying, okay, so the stock price since it went public, it looks like it's up, but over the last year or so, it's gotten absolutely crushed. It's a penny stock. And by the way, management is not respecting shareholders with huge amounts of dilution that was tied to effectively these deals that they're doing. So I have no idea if these are really quality deals. It's hard to say just because like how much time has gone by. I mean, let's once again go back to where they were. Like there's only one segment here that's generating a net income. And keep in mind, you're talking about a business that's, $30 million value. And you're saying, maybe it did 700,000 in net income, but these other segments were losing the money. So it's just unclear to me, like what really the story is here. By the way, their dilution's awful. And this picture doesn't even capture how bad it is. I think it's closer to 80 million diluted shares. So, I mean, like, look, if I own a small microcap stock, but management's actively buying back stock, like management says, hey, when the stock's cheap, I'm going to be buying it and we have a huge cash balance and we're generating tons of cash flow. I'm just not seeing that here. But then you might say, oh, well, wait a second. They just announced, this $5 million contract, to deliver technology and user acquisition service to a European video game developer and publisher. The contract is term in effect until July 2023. So effectively, this $5 million contract goes for the next year. So they're going to get this $5 million in the next year. Okay, so that might be a boost to revenue. That might be interesting. What they're doing is delivering its technology and video game user acquisition platform to target players from over 20 countries and 5 different languages. Okay, so this is once again part of that business where they're hired to go find customers. And so I look at this as on behalf of a video game, a video game developer. And I look at this and I think, first of all, I've seen other business models that are like this. I looked at Skills previously, and that was just an absolute disaster of a company. And I look at this and I'm thinking, this is going to be a super low margin business, and that's, if someone's hiring you out for some sort of marketing budget, if you're recognizing that $5 million as revenue, well, that's really $5 million that's being spent to market, and you're just going to get some sort of cut of that. And that's what it looks like you're seeing with their results, which, by the way, not only are their results delayed July 31st, but they're unaudited and prepared by management. So I would rather see something prepared by like a legit accounting firm and have some audited results. But, whatever. This is, you could say this is, oftentimes the quarterly results are unaudited. So I'll give them a pass for that. But super low margin business. This is not like a software business with 60, 70, 80% gross margins. This is the red flags just keep piling up with this. To sub 20% gross margin is not good, not great. And by the way, you're looking at a company that's, still, despite whatever growth they have, which has been done through issuing stock and cash payments, you're still looking at a business that's cash burn during the first 9 months of the year. So I look at this story and I'm thinking this is just too hard right now. Now, could I be wrong? Absolutely. Like I could always be wrong whenever I look at any investment. But I think it's important to try to size up like, hey, what are the key things you want to find with a company? You want to find organic growth, and finding, a company with a lot of growth but done through deal making, that's less appealing. A company with a lot of growth done through a lot of dilution, that's less appealing. You want to find a company that's self-financing. That means they're generating real free cash flow. I'm not really seeing that here. Here I'm looking at cash burn. And by the way, they have like $3 million roughly in cash and $2 million plus in debt. So really $1 million net cash, and they're burning to the tune of $1 million. So overall, I look at this type of setup. And so I hope this video has been helpful for the viewer who requested it. And I hope it's been helpful for the viewers who watch this to sort of size up like, hey, it's important to understand some metrics like revenue can easily be twisted to make it look like it's really great. Like, oh my gosh, you're growing at 300%. But you need to understand what's actually going on beneath the surface. And if it's driven just by like, hey, we're going to throw a bunch of mud on the wall by issuing a ton of stock and buying a bunch of companies, that may not actually have to do with one another. And now you have all these different subsidiaries that may not, arguably this is not the way. In my opinion, I haven't seen a lot of successful stories like that. And so could it work out? Maybe. This is just way too hard for me. What I would need to see if I were an investor here is a situation where there's a clear case for why their individual products are going to win and take market share over time. I would want management to clearly call out what their organic growth rate is without any acquisitions. What are you growing at? And then I'd need to see real free cash flow, especially given the risks that are being considered for such a small company. I would want to see a company with real free cash flow and sort of saying, hey, we are going to self-finance going forward. So at this point, just too hard for me. And I hope this video has been helpful for the unrivaled investors out there that are looking to understand, hey, how do you peel apart a company? How do you do that due diligence? I hope this video has been helpful. Thanks so much for tuning in.